We need to get to our power plan right away. How can you use mutual funds as a way to add hedge fund strategies into your portfolio while maintaining transparency and liquidity all at the same time? Well, we've got a panel of experts to tell you how to do that. Tom Meyer, CEO of Meyer Capital, and Don Bertrand of Wealth Trust Arizona. Nice to have you here, gentlemen.
Thank you, sir.
Don,
I'll
start with you. I'll start with you, if I could, Don. How do you employ this type of strategy to mimic, if you will, hedge fund returns and eliminate some of the risk?
Sure. Well, we're using two funds, among a lineup of alternative investments that we have. One is a managed futures fund, and one is a long-short fund. The reason why we like these is that anyone can buy them, so you don't have to be an accredited investor to buy them. Mm-hmm. They have daily liquidity, low correlations to the broad indices, and lower standard deviation. Okay. So well, we love them, and they're both great strategies.
All right. Hey, Tom, tell me why, as an investor, I need to go in this special hedge fund, mutual fund type of thing. Couldn't I just hedge it myself by putting money over here in commodities and then putting money over here in tech and kind of try to offset myself without going to a special fund that's going to charge me to get into it?
Sure, you could, but look what just happened. What if you just did the triple short on the indexes? You would have been down, my goodness, what, 40, 50, 60%. The bottom line is that you're getting professionals to do the long short commodities, manage futures, and people, for the most part, do not have time to do this on their own.
Right. And so, Tom, you recommend the TFS Market Neutral Fund and the Hussman Strategic Growth Fund, right?
Yes.
What does it cost me to put $10,000 in one of those funds?
Okay. Well, first of all, through the TFS is a loaded fund, but through a fee-only investment advisor, there is no fund charge. Hussman is a NTF fund or a no-load fund. The fact of the matter... Go ahead.
Go ahead.
Don, let me turn to you before we continue with Tom, because I want to make sure we get your picks in. Don, you're looking at the Diamond Hill Fund. It's a long-short fund, and then also the RIDEX Managed Futures. Right. Why the RIDEX Managed Futures?
Well, that fund is 50% of the fund is in hard commodities, mm-hmm. and 50% of the fund is in global currencies. So again, I mean, you don't have to be an accredited investor to buy it. Daily liquidity. And again, it's if you want to look at an asset class that has a very low correlation to the broad indices, I mean, that's the one.
Right.
Managed futures, as many people know, was one of the few asset classes last year that actually had a positive total return.
And the reason I was asking why RIDEX is because for a lot of the managed futures, the mix is very important, and what they decide to put in the portfolio is extremely important. There are a lot of choices out there. What about Diamond Hill, very quickly, Don?
So that's, again, that's a long-short fund. So the managers there are looking to buy good, solid companies at a discount and are looking to short companies that either have a very high valuation or whose fundamentals have deteriorated. So pretty straightforward fund.
Okay, Tom, let me just counterpunch you one more time on this. Stocks down 50% since October 07. Up 21% in 19 or so days, 13 trading days. That's the highest jump in 70%. Why don't I just put money into stock mutual funds? Why do I need to hedge it all, Tom?
Well, how about this? How about have a core portfolio of ETFs, cheap mutual funds, and cocoon your portfolio with 20 to 30% of alternative investments? How about that as a return? You would get maybe 1,000 or 1,500 basis points less than the down move that we just had.
Okay.
And granted, on the upside, you would be a little bit lagging here. But you know what? If I could give you a ratio of a 75% upside capture ratio and only a 25% downside capture ratio, is it worth the fees?
Probably take it. Yeah. Thank you, gentlemen. I appreciate it very much.
Nice job.
And
Thanks
by
so
the
much.
way, Tom's going to be a guest on The Money coming up next Friday.